Alright, hi guys, welcome back to PKFX YouTube trading channel. So this will be a very quick update on the trade that I have already closed out as a win. I've already taken profit on this trade, AUD USD. So just to break down in this particular trade and the reason of the entry and the reason for the exit so that it's very clear over here. In fact, I've already journaled this particular trade. This was trade number 25, AUD USD. As you can see here, I've marked it up as a win. And the emotion when I took this particular trade was calm. I only risked 0.5% only for this trade. The trade reason, so this trade was actually a counter trend trade. If I go to the weekly technically is bullish, and when the weekly closed over here, it was pretty much at a very high point and it was reaching a resistance zone where the round psychological number of 0.72500 was also coming into play. And I saw that the market made the higher high without any sort of pullback for quite some time. I didn't consider this as a sufficient pullback. So I was expecting that the pullback was pretty much long overdue and there should be some sort of a pullback to come back and retest this particular previous structure point before any sort of rally thereafter. So I was expecting this particular week to be the pullback, and apparently it ended up as the week that had the pullback. So that was great. But I understood that this was a counter trend trade, so I didn't risk too much. I know that I'm selling at a very high point, and I know that the market can just continue to rally all the way up, right? So the weekly was a buy. The daily now has officially turned into a sell, but at that point of time, the daily was pretty much a buy as well. This was the higher high, right? Actually, it was roughly around here when I entered. This was the higher high, and this was the higher low. So technically, at that point of time, the weekly and the daily was also a buy. The trend was going up, and pretty much this was my entry point. You can see even the 4-hour candlestick. This was the higher high, and this was the higher low, and the market did not break the higher high and the higher low. So technically, when I entered this trade, the weekly was a buy, the daily was a buy, the 4-hour was a buy, and I chose to sell. So it's completely a counter trend trade. And when I chose to enter this trade, if I go down to the 30 minutes candlestick to see what exactly happened and how exactly it played out, you can clearly see that the market was actually ranging. My reason for the entry for this particular trade was when the trade was somewhere around here and it closed out, and when the following week opened up again, I saw this doji candle and a huge dump towards the downside, indicating that there is some sort of a very strong sell zone over here, because this sort of sudden volume would usually mean that heavy market players are waiting here to dump on the market, right? So this one particular sell engulfing candle engulfed all these previous candles, which gave me the fairly, I would say, a fairly reasonable reason to say that, hey, we are now officially coming to an area where it's going to be really hard to continue to rally upwards. So thereafter, after this dump, the market started to move upwards, where I set my entry point, my sell limit around this region. And to be fair, when I entered, the market was still a sell. But upon entry, the market actually broke this particular region, turning the 30 minutes candlestick into a buy. The market could have rallied upwards, but I was pretty confident on this trade because I give sufficient amount of stop loss here. If I go to the 4-hour candlestick, right, you can see that the stop loss that was placed over here in this particular trade, right, it was close to about 50 pips. Yeah, 50 pips stop loss. So at a 1 to 2 risk to reward, a 50 pip stop loss that's covering the entire resistance zone over here, I believe this was sufficient. The market, if I were to zoom in, it did come back down and then again went back up. So the 30 minutes candlestick was pretty much flip-flopping. It was going buy, sell, buy, sell. So that is one of the reason why the lower time frames is best used for entries purposes, but not really for the trend direction. So the higher time frames, in terms of the 4-hour, it was still a buy. It was still a buy throughout this move over here. Actually, it remained a buy throughout the trade. Only now, when it closed, the last 4-hour candlestick, it actually shifted from a buy officially into a sell. So this counter trend trade later on did go all the way up here, but I was pretty confident with this trade still, and I kept holding. because I told myself I've already committed this amount to risk for this trade. Most probably it's going to go and hit my stop loss, but if it did that, no problem, because I was entirely wrong with the market direction. As long as it doesn't wick me out and then go into my direction, I'm fine with that, right? So eventually the market did turn around, and as you can see, the majority of the move was actually made on Thursday and Friday, where the market literally rallied all the way down. And during Friday night, I pretty much closed out the trade because it's a counter trend trade, and now I'm expecting some sort of a bounce in this area where the upcoming weekly support region is coming in. So can I continue to hold the trade and expect it to break below and continue to rally downwards? Yeah, sure. But if I were to go back to the daily candlestick, I can see that my expectation was the market to come back down here, where you can see the daily EMA has also grown up here, and this area to act as some sort of a support, and eventually most probably the market to rally upwards. In fact, I'm lining up for next week's trade to be a buy for AUDUSD, because the market has already done what I wanted to do. The market has corrected enough. If I go to the weekly candle, is this sufficient? Probably not. It can even come all the way down here, retest, or worse, it can even go all the way down here, really dump down here before it finds any sort of support before pushing up. But I got to be fair over here. I shouldn't be greedy. This is the trade that I wanted for. This is what I aimed for, and the market has already given me this. Hence, I secured this and I move on to the next trade. And for that, I updated accordingly for the results as well. I clearly mentioned, what can go wrong. The market is bullish on weekly, daily, 4 hour, in fact the 2 hour as well. Only the 1 hour and 30 minutes was pretty much shifted to the sell. So the market can just continue to trend upwards, right, following the bigger time frames. The result, the 30 minutes chart did have the shift of structure from buy to sell to buy to sell, as the market was ranging in the same resistance area. So this is what I mentioned over here, right? This area at that point of time, if I go back to the 30 minutes candle, right, the market was pretty much ranging in this region, right? So you can see clearly over here, the market is going up, the market is going down, the market is going up, the market is going down. This is technically considered still ranging around this area of resistance until it made this push downwards. That's when I was confident that, hey, the market is indeed going to go down, right? So I updated exactly what happened there, right? The 30 minutes shift of structure from sell to buy to sell to buy, as the market was ranging in the resistance area due to sufficient stop loss given to cover the whole area of interest by about 50 pips. The market did not wick me out and eventually went to take profit. So this is one important lesson learned. Invest as much as you can in the amount of stop loss so that you don't get stopped out before the market goes into your direction. So this is very critical, and this, I believe, is a very good lesson learned for the upcoming trades. Invest sufficient amount of pips for your stop loss so that you don't get wicked out before the market eventually turns into your direction and start rallying into your direction. You don't want to be wicked out like that. So finally, I decided to close out the trade near the take profit without holding longer, as market was about to close out for the weekend at Friday 11:45 p.m. to avoid weekend gap, since this is a high risk counter trend trade. So I updated the timing accordingly, and I said, hey, it's 11:45, I'm closing this. This trade took 4 days, 12 hours and 45 minutes to play out, and it has been a win. So great. Even though I lost 2 trades previously, this one win already covered back both these losses. So that's the beauty about having the proper risk to reward. So that's about it, guys. I will now, since the market is closed, analyze all the pairs and come up with the weekend game plan for the upcoming week. All right, thank you so much, guys, and have a good day.